Good morning. I'm Peter Milios from the Finance News Network. Stocks rose Monday as investors contemplated a potential slowdown in rate hikes from the Federal Reserve and braced for a busy week of earnings. A parade of tech earnings and economic data releases will give investors plenty to ponder for the rest of the week, with nearly a fifth of the S&P 500 companies due to announce quarterly results, as major markets in China will be closed this week for the Lunar New Year festivities. Earnings news this week is expected from the likes of Microsoft, Johnson & Johnson, Tesla, Visa and MasterCard, to name a few. And on Friday, December data for personal consumption expenditures, the Fed's preferred inflation gauge, will be published. Markets have now priced in a nearly 100% chance of a 25 basis point hike, according to CME Group data, which would bring the interest rate to a targeted range of 4.5% to 4.75%. Overnight, the Dow Jones Industrial Average rose 0.8% after rising more than 400 points early in the session. The S&P 500 added 1.2% and the Nasdaq Composite surged 2%. Semiconductor stocks and shares of Tesla and Apple gained on hopes that a reopening in China would boost their businesses. Both big tech names recently grappled with the temporary shutdowns and blows to production as the country dealt with surging COVID-19 cases. And if you haven't seen all the artificial intelligence headlines of late, you're about to hear a lot more about ChatGPT, as Microsoft has confirmed a multi-billion-dollar investment, making its biggest bet yet that artificial intelligence systems have the power to transform the tech giant business model and products. Precise financial details haven't been disclosed, though the company on Monday said it was investing billions of dollars in a multi-year agreement. People familiar with the talks previously said ChatGPT was seeking $10 billion from Microsoft at a $29 billion valuation. Most sectors across the market were high. The best performing thematics included AI, SPACs, hydrogen, and EV-related industries. In commodity news, protests in Peru are threatening to choke off access to almost $4 billion worth of copper, just as China's emergence from the COVID lockdowns promises to boost demand. And the price of spot iron ore has been one of the major beneficiaries of expectations of strong demand as China reopens its economy after abandoning its strict zero-COVID policy, while other commodities, such as crude oil and copper, have also enjoyed recent gains on the back of the China recovery narrative. Iron ore's rally seems grounded in actual gains in demand. The spot price of benchmark 62% iron ore, as assessed by commodity price reporting agency Argus, ended at $126 a tonne on January 20th. This is up 7.1% from the beginning of the year, and the steel raw material has now surged 59.5% since its lows last year of $79 a tonne reached on October 31st. The SPI futures are pointing to a 0.3% gain. Thank you for listening.